Welcome to Digital Asset News. Take a top stories in crypto and bring it on a bite-sized pieces. Today, just like the thumbnail suggests, we're going to take a look at, are we doing the same thing as far as a parabolic run as it has been in the past? So what we need to do is just to take a look at where we have been to know where we're going. So we're going to take a look at a little market cap history, take a look at 2017 and 2021 and exactly how they just line up almost perfectly. We'll then take a look at current on-chain analysis to support that. Then a couple of stories about French bank eating up and gobbling up DeFi projects, and also Voyager, the brokerage, some pros and cons. So we'll go over all that stuff, but first take a look at what's going on in the market. So today, it is Saturday, a beautiful day, and look, market's up. We're doing pretty good. We're at 2.12 trillion, and Bitcoin price is almost at 48,000. I'd like to see that. But the sentiment for Bitcoin today is pretty neutral. And it was crazy because, like, as things were dropping, it seemed like the bullish sentiment was just kind of increasing. And now we're here. That's when people are getting cold hands or cold feet. I don't understand. I think as time goes on and everything starts to conclude, I think we're in the right place at the right time with the right projects. And just take a look at overall gains on the last 24 hours. Yesterday was a great day. Today's not too bad. Look, Bitcoin's up 1%. Ethereum's 4%. We're almost at $3,400. Binance Coin, wow. The number 3 spot at 4%. And it looks like they're making a massive run at 430. Cardano's around 226. Tether, nobody cares. Solana now in the 6th spot after jumping up 21% in a 7-day average. And I got to tell you, as far as like Solana, I'm glad I picked that up. I want to thank two people, Mike the Investor and also James from Invest Answers. Their YouTube channels are in my description, and those are the ones that got me into Solana a while back, and I've been dollar cost averaging for quite some time. So anyhow, that is what is going on into the market. Let's jump into today's top story. So the first thing, well, not story per se, but it's about market cap. And I was looking at this yesterday. We briefly touched on it, and it was the total cryptocurrency market cap. And this includes Bitcoin and every altcoin out there. Now we can scroll down here and we can take a look at what the total crypto market cap, excluding Bitcoin, but I really don't care about that. I just don't. What I'm looking for is patterns, and I'm looking for what happened before to see what's happening now. Now, past performance does not equate to current results, right? I want to make that crystal clear. I know people have been comparing 2017 to 2021 forever, but I will remind everybody, when I got into crypto in 2017, not everybody, but there's a lot of people that were saying that 2013 was an anomaly and we were not going to see that type of parabolic bull run. And guess what happened? The exact same thing happened. And everybody's like, well, I guess it did. And then now I hear the exact same thing. Like, well, okay, 2017 was great, but we're not going to have this parabolic bull run. It's going to be shifting all over the place. And maybe it will. Maybe it will. But here's my question to you. What if it isn't? What if it's the exact same thing? Are you positioned in the right place? Are you doing your due diligence? It's really a question that only you can answer. So when I take a look at crypto market cap, I mean, look, if we just zoom out, look at this horrible market cap. I mean, it's how weak sauce, 780 billion. It's nothing. That was on January 5th, 2018. That's when we were just losing our minds. Now look over here. We had a market cap of almost 2.5 trillion. And then, of course, we're all complaining because we're at like 1.3 trillion. It's amazing to me. So I took a look at that. I took a look at everything and I broke it down. Because when we want to just, get a big picture, we just zoom out. I'm like, okay, everything's cool, right? But what I wanted to take a look at was how everything compared. So I did 3 little pictures. And I took it to it like this. Let me put this up here. So if you take a look at 2016 to 2017, everything was flat on the left-hand side, right? Flat as a board. And then as we get into, this was in 2017 in May, first of all, we had a little spike, and then we had a dip. And that was when we had a nothing of 68 billion. That was in May 2017. Then there was a little spike, and there was a dip. And that was it. It went down to 67 billion. So lower than it was in May. And everybody was talking about how crypto was dead. It was going to fall apart. Then we had a spike and then another dip in September. And then it kind of went a little spike and then it went parabolic. Okay? Let's just try to remember that. That's the one I'm pretty much focused on. Now, let's take a look at this year. 2020, 2021. Pretty flat. Had some pretty big action. Spike. Then a big fat dip. And we were at 1.4 trillion. Everybody's talking about the cycle is over. The bear market is here and we'll never see it again. It's just awful. Okay, 1.4 trillion. And then we had a spike, and then we had another dip in July, 1.2 trillion. So again, May, July, and look at then, a spike and then a dip. It's September at 1.8 trillion. It is pretty much mimicking the same thing over here. So if we take that and extrapolate it just a little bit, just take a look at what could be, again, September, not a great month. What happened after that? October, November, December went parabolic. So again, I cannot stress this enough. This does not mean for a fact it's going to happen. But if you look back in 2013, all the way to 2017, and again in 2017, they said the exact same thing. It wouldn't happen, and yet it did. So here we are sitting on the precipice of what happened. And on October 1st, what do we have? Well, we had a pretty big run up. A couple $100 billion just kind of flowed into the market, which is pretty funny. A couple $100 billion flowed in from 2 trillion to almost 2.2 trillion. Remember back here, our dip in May, the entire market was 68 billion. 68 billion. And now here we are. So just try to remember that. When in doubt, zoom out. I think things will be okay. So let me know what you think about that in the comments section. But I will just finish up with this story with this, and that is that if technical analysis is pretty much a self-fulfilling prophecy, if enough people talk about it and they believe in it, then it seems like TA kind of works out like that. I know there's a bunch of TA people who say, nah, that's not true. But when you see enough of the charts and enough of the traders, and it kind of becomes a self-fulfilling prophecy. So when we start to see like these types of things, is it a self-fulfilling prophecy? What came first, the chicken or the egg? I don't know what's going, which way these things are precisely going, because I'm not Nostradamus, but this is what I truly believe is going to happen. Not investment advice, just investment opinion. So this will be the narrative that I'm going to be with. And I think a lot of people out there in higher positions, much more than me. So if it is or it isn't, maybe it's just a self-fulfilling prophecy. Let me know what you think about that in the comments section. Let's move on to our next piece where we talk about 2017 and 2021. Oh, we already talked about that. Sorry about that. On-chain analysis. This is where it gets good. On-chain analysis, we like to see what's going on. I mean, TA is great. Fundamental analysis is fantastic. Sentiment analysis is good, but also we want to take a look at what's going on as far as on-chain. So real quick, this is from Crypto Quant, and it was talking about the most active OTC movement since October last year. It states the ratio of all exchanges to total transaction volume on the Bitcoin network is at the lowest level since October last year and is on a downward trend. Why is that important? Well, as we can see here, tokens are being transferred, and as they're being transferred, the fund flow ratio goes down. As they're being transferred around, the price has gone up as things have been going just a little bit as far as like the increase of transferability and the fund flow out of exchanges are going out. So once that happens, we have an increase in price. We've had it again and again and again. Also, we take a look over here. As far as like Bitcoin miners, again from Crypto Quant, we can see that miners aren't selling too much. And then what happens when they don't sell? They hold on to their crypto. Oh, the price goes up. It's amazing how that works out. And then also my favorite one, all exchange reserves. This is just for Bitcoin itself. And look at this. This in the bluish purplish, that is the actual reserve of what the exchanges have as far as Bitcoin. And it keeps going down because people keep buying it and transferring it off. And then guess what happens? Well, we got the same demand, but not as much supply. All of a sudden, price goes up yet again. And then, of course, let me back up here and show you. And then also, here's another one of my favorites. It's the Ethereum All Exchange Reserve, and it's even more pronounced. Look at this. From the top left-hand corner, that's a bluish-purplish line. That's the reserves of all the exchanges and what they have as far as Ethereum. See how much it's going down? It's going down mightily, and they don't have much yet at all. And look at the price. Wow, it looks nice. So if we can take a look at some on-chain analysis, look at price and demand, supply and demand, I think we're in the right place at the right time with the right product. Anyhow, let me know what you think about that in the comments. And then let's go on to our second to last piece about French bank and DeFi. I'm not going to spend a ton of time on this. It's something that is in the works. And the reason why I like to talk about these things is because it just shows progression and adoption. It's not so much about this bank's going to offer this tomorrow, but it's banks are getting into it, institutions are getting into it, big name people are getting into it. And that's what we want. We want a lot of people under our umbrella to embrace digital assets and cryptocurrency. So what's going on here? There we go. Third largest bank in France, Société Générale, proposes use of DeFi protocol MakerDAO. So the, again, French multinational investment bank and financial services company Société Générale has proceeded to leverage the DeFi protocol MakerDAO. The proposal, dubbed Security Tokens Refinancing, was published on October 1st. It aims to utilize the DAI stablecoin to refinance a covered bond concept. Again, if you can't beat them, join them, and that's exactly where all the banks are going. They're like, look, everybody wants cryptocurrency. We know where things are going. We do not want to get blockbustered, so let's just get on the train before everything just passes us by. And I think it's a good idea. It just shows mass adoption. And then lastly, just real quick, I want to talk to you about Voyager, the pros and the cons. So this was you've probably been seeing a lot of this on Twitter, crypto Twitter. If you haven't followed me on Twitter, there I am at @NewsAsset. Everything I talk about, or a lot of things I talk about on Twitter first, kind of flesh things out, see what's going on. And still, it has all the best information. But you've probably been seeing a lot of information about people bragging about all of their yield that they're gaining for just having cryptocurrency, having bought on Voyager and just leaving it there. And I am no exception. So what we have here is I stated this. As the rewards roll in, if you're using the Voyager app, there's no reason not to have at least 500 tokens. You get 7% staking, 1 to 3x crypto back rewards. You get a 0.5 to 1.5 earnings reward boost, and you get a withdrawal discount. Now, that's going to come later, but that whole part is still true. And what we got right here, there's my wife, hello, and then we got the Voyager token. I mean, this is just me just having my Voyager token just staying on there. And this was just 2 out of the like 30 that I have. I got 164 just Voyager token. And right now it's about $2.50. So, you know, not too bad for doing Zippo, nothing. And then here's BAT, which I don't really have that much, but whatever else. So, I mean, the pros is all right there. And I always say, like, if you're going to use Voyager, might as well have 500. Unfortunately, it's only for Americans. They're still trying to branch out, but that's just one of the parts. Also, the big thing that I think about is if you're going to use Voyager, just use the recurring function. It's super simple to use. I'll show you right now. It's like the easiest thing of all time. So all I'm going to do is I'm going to pull up my phone. So look, so here's everything that you can buy. You got Bitcoin, Ethereum, XRP, blah 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 blah. Let's see. It's something I don't have. Let's say Tron, right? Tron. If I'm gonna buy Tron, I'm not gonna buy Tron. But if I wanted to buy Tron, I just click this button right down here. You can't really see it. It says buy Tron, and then it'll say how much you want to spend. I want to spend $100, and then it's gonna say up here set up recurring buy. I just click on that. There's my bank account. I'm going to select the frequency, daily, weekly, monthly, and it just set it and forget it. And then I just put in, again, $100. And if I want to do it, down here it says slide to schedule, and it's already set up. I don't have to think about it. It just comes in. I don't have to keep going back and so on and so forth. So to me, I think it's like a pretty easy thing to use. Now, I will say this. There is a downfall, and these are the cons of using Voyager, and that is that out of the 65 different assets that you can use, let me go back. You got everything. I mean, there's a ton of things you want here. Bitcoin, Ethereum, Cardano, Luna, Atom, VeChain. I mean, all this stuff, right? 65 different crypto assets. Out of those, you only have 13 that you can take off the platform. Before everybody's like, oh, I'll never use that because I'm gonna take that off and put it in cold storage. Sure, you can, but here's the thing. I mean, the 13 that they have are the ones that I primarily invest in. There's a couple that I don't. If you leave it on there, you gain yield. And you just saw how much I got just for doing absolutely nothing. If you don't want to do that, don't use Voyager, use something else. But if you do, there's a link in the description. Looks something like this. And I'll take you to my handy dandy exchange of wallet fees. And these are all the different wallets and services that I've ever used, and ones that I recommend, and things that I just do not recommend. So it's all right there, and it talks about, if you're able to get loans like in Celsius, it's all right there, and then all the commissions and whatnot, and everything as far as like yield. So that's it for today. Look, I know it was a little bit long today. It wasn't too long, but there's a lot of things going on. And I will just say this. I still think that the most exciting times are ahead of us. And I think Q4, like I've been saying for the last, I don't know, year, will be the big fireworks show. And that's just what I truly believe. So if you like that type of video, go ahead and give me a thumbs up. We greatly appreciate it. Also consider subscribing. A lot of things we talk about on this show are time sensitive. And that is it. So I appreciate you coming by, and I will see you in the next one.